about COVID then.
Hi, everybody. Happy Friday, first of all, and welcome back to the weekend, the Friday episode of VCTV. So, all the viewers and speakers, this is a very interesting session on VCTV. So, we're going to discuss everything that sort of has affected us in the last week, including the topic itself, which is institutional investments, interest into the DeFi space, into the crypto space, and into the NFT space. So these spaces are gaining more and more interest from the institutional players. So we're going to be talking about that and talking about everything else, talking about the pandemic or how it's affecting people in different parts of the world. So yes, let's just start with the first speaker that we have, and we're going to have more speakers joining us as we speak. So let's go to our first speaker. Hi, Kingsley. How are you, and where are you dialing from? Happy Friday. How are you?
Hello. Good evening, everyone. How are you? How are you doing? Sunny, happy weekend. Happy Friday. The beginning of weekend in Asia. I'm talking from Tokyo, as you know. Japan is different news today. The COVID lockdown has been extended to the end of the month, and we are just watching what is going to happen. Well, the pandemic is here, but we have, like we say, we need to stay positive and take the opportunity given to us. My name is Kingsley Kobayashi. I'm a serial entrepreneur, turnaround expert, blockchain investor, and traditional financial investor. We invest in different startups and emerging technology. Can you hear me?
Yes, I can hear you very clearly, Kingsley. I just couldn't see you for a few seconds, but you're back now.
Okay, so with the pandemic, a lot of opportunities are coming up in the DeFi space, in the crypto space, in the digital space, in the technology space. It is time for people to embrace it and realize that the COVID pandemic is going to be here for some time. Predictions are going from 1 year to 3 years to 4 years. Well, it is time to spend. It is a good time to spend with our families. It's a good time to plan. It's a good time to embrace technology. If you haven't learned about it till now, try to study from home and know a little about it, and just watch your tokens grow. And that is all that is important. Look for the good tokens to invest in. Look for the good DeFi projects to invest in, and you won't regret it.
Thank you, Kingsley. May I ask you a personal question? Is it because of the lockdown that your restaurants are closed? Is it because of that you moved to investing into the tokens? Is it because of that?
No. I've been in the blockchain space for more than 6 years, so I've been doing it concurrently. I've always been an investor for the past 30 something years, and embracing new streams, new technology, new startups have always been my thing. So it's very important that you diversify. You don't just stay focused on one thing. You have to do many things at the same time. That is why I would rather say I'm a versatile serial entrepreneur to just a serial entrepreneur, because I look at every field. They are all, as long as we're going to make money legitimately, it is good to look at.
Wow, so you are a serial entrepreneur into real estate, into hospitality, into blockchain startups and cryptos. Wow, that's amazing. Thank you so much for being on our shows, and good to see your social media and posts, and you've been being so active on social media as well, because this is the right way to reach out to the right now.
Pleasure to be here, Sonny. I think viewers should look at our book. Our book is out, like you know, and it's a lot of tips there on how to invest and what to do to make side money, things like that, which is important at this time.
Yes, absolutely. How to be financially free as well. I've seen those. Thank you so much, Kingsley. And again, happy Friday. And I always love to have you on our shows. Okay.
Pleasure to be here. Thank you, Sonny.
Yes. And next we have from Poland, Adrian. Hi, Adrian. Happy Friday. How are you?
Hi, Sonny. Happy Friday. I'm very well. Basically, I'm practicing from time to time because there's a lot of burnout, there's a lot of stress, and sometimes because I'm also I'm working a lot during the night, I'm practicing short napping during the day, which is fantastic. For I don't know, 15, 20 minutes. It's like in the books. It's one of the best medicines ever, I would say. After a 15 minutes nap, you are refreshed like crazy. So I'm in work mode anyway. So I'm here to contribute. So let's start doing actually.
Yeah, absolutely. Obviously, we want to hear about some insights from you as well. But is it like a change of lifestyle for you? Were you always a night person, like working through the night and taking interim breaks during the day, or is it because of the pandemic you just changed your routine?
Not quite. Basically, in 6 years ago, I've inserted few things into my lifestyle. One of them is to train for marathons, and I finished 3 with the medal. And I run a lot, especially in the mornings. I also started to donate blood regularly.
Right.
Which, besides the fact that every blood donation can help up to 3 lives, it's a very good exercise for your own body. Even you can heal better. It's called the recipe of youth, because all the time by donating blood, the dead cells are at the gate to be flushed from the body. Having also 3 kids, and they are at home with me and my wife, and working on multiple businesses with different time zones. It's like a non-stop working schedule. So this is how it is. The big change with the pandemic is that we spent more time with the kids than ever, which was fantastic. And apart from that, it's business as usual. And we need to be alive. We need to be healthy first before doing anything else. So it's like, okay, I want to achieve this, I want to achieve that, but you need to play your role. It's like with a business. I want to be, let's say, successful. I want to do this, I want to do that. But without execution, everything remains in the dream space. And it's the same with DeFi somehow, because this industry appeared from some people, very smart people, who started to dream and to believe that there could be a better way for the financial world to be transformed. And initially, this was like a science fiction idea. And when I'm looking at DeFi and I'm looking at decentralized autonomous organizations, we realize, and we see this in what happens with GameStop. We see, for example, in eToro, they have they gather ideas from all the traders, and they make some algorithms based on that. We realize that this crowdsourcing of minds, which can come from everywhere in the world, which are directed towards a goal, can work very well, and can work better than a centralized authority, which may be which may not be so specialized to manage that thing. Is an example like, okay, if we are looking at politicians, for example, let's say when you are in a government in a country, you need to be, besides everything else, a very good manager, because a country is like a business, even can be more complicated than a business. And sometimes the people who are in government, and of course I respect them all, but at the end of the day, some of them, they don't have the necessary life skills to manage a country. They are politicians, And based on that, sometimes they take decisions which are not in the best interest of that country, of the whole people living, of the majority of people, let's say. If you want to please everybody, of course, you need to start selling ice cream. Otherwise, you will have some people which will not be pleased. And the theme for today is about institutional investors in DeFi. So DeFi is in I believe it will become in a certain moment the default setting in finance, in banking, because somehow it's a natural thing. And the people who are in 20s right now, or even earlier than 20s, they are digital natives. For them, without any training, actually, they can put their hands on the latest gadget and they know what to do with it, because it's part of their DNA. Our DNA has evolved, and even if let's say we all have that reptilian brain, the 2 million years old reptilian brain, which showed itself in its beauty, especially at the beginning of pandemic, when we came down to our survival instinct. That's why we saw the toilet paper and other things happening. Our DNA has evolved. If we are not in 20s, we need somehow to reprogram our brain and even our DNA to cope with these new paradigms. And this is the direction the world is going. So it's normal that the institutional investors to come here in this space, because they are interested not necessarily in the next token or in the next DeFi token. They are interested to put their money, to put their resources in the things which are here to stay. Because the institutional investors actually are like I would say the creators of the financial world somehow. They are the deal makers. They are the movers and shakers, you know. It's like few of them have a real concentrated power, which is like with the wealth. 2% of the people own 98% of everything.
Yeah.
With the institutional investors, more or less, the institutional investors are part of this 2%. So I rest my case here. So it's normal, because they are part of this very powerful 2%, to come into DeFi and to put funds here, to take some of the risk. Because when an industry is at the beginning, it's a jungle. DeFi is a jungle right now. It's a jungle which is not regulated. It will be, but it's a jungle, both with great players, but also full of rug pulls. There are many statistics of a ton of funds which were lost to different ways in DeFi projects in 2020, 2021. So there is a lot of risk. But if you invest in the directions here to stay, also there is a lot of reward. The difference between, let's say, small investors and big players in DeFi or in anywhere else is that small players usually don't have the resources to eat their mistakes, so they go bankrupt very fast. An institutional investor with a diversified portfolio have always funds and backups to eat the mistakes, and let's say to put funds in 10 projects, just as an example, 7 to fail, 2 to be okay, and the 1 to make up for everything and to be wildly profitable. They can do that, you know.
Yeah,
So
yeah, sure.
that's why they are here. and will be here trying to find they way into this industry, but because they feel, they see that the industry is here to stay. This is very important. It's not a fad. It's not a fly-by-night thing. It's a huge industry which is developing under our eyes and under their eyes.
I
This
think,
is what I'm saying.
yeah, Adrian, I think you have nicely summarized it with your opening remarks about the DeFi space, even with the crypto space, NFT, everything, be Bitcoin investments as well. I think things have changed over the pandemic, right? I mean, a lot of interest from big institutions that we've seen, which is bringing a lot of trust as well into the ecosystem that was already in place before 2020 as well. Yeah, as you rightly said, it's not a fad. These are serious people doing some serious things. And this is what, as you rightly said, the bank and the financial institutions are obviously going to embrace that as well soon. So it's a good thing. So let's just discuss more about it. Let's just give our viewers some information about retail investment as well. I mean, obviously we are discussing about institutional investors, but what's in for retail investors as well. So as Ethereum DeFi ecosystem grows by billions of dollars each week in collateral, cryptocurrency funds, family offices, and FI increasingly seek exposure and access to the diverse, decentralized finance opportunities that compose Web3. So to keep up with the pace of DeFi innovation, institutions require safe, obviously, secure, efficient investment and operational processes. So we would like to know how exchanges are involved here, how custodians are involved here. So it's like an ecosystem, right? We have the DeFi startups, we have the institutional investors, we have the exchanges, and we have the custodians as well. So Kingsley, I just want to ask you with this opening question. So what is the participation from institutions in DeFi space? What do you see? What's coming as per you?
Yes, just to add to what Adrian said before, I think we should consider ourselves one of the lucky ones because we have wife and children at home, or we have children at home to talk with. If you were alone, what will you do? Or if there was no internet, what will you do? We have means of communicating with our families, with our ones, so that is very good. We can call them on the phones. In 1918, there were no phones. There were no nothing but here they survived. So we are actually lucky. We should watch happy movies like Gary said, and that is very good. Well, the decentralized financial technology is here to stay. We have no choice. If we have to adapt, the institutions are actually adapting to the current situation. The pandemic has put people in a position to actually embrace DeFi, embrace other cryptocurrencies, embrace technology, embrace different things that are coming up right now. Like Adrian said, our body, our DNA, our mode of thinking is shifting from traditional finance to digital finance, to DeFi. So it's either you adapt or you die. Human beings are very lazy. We are not used to changes. We want to do what we do all the time. But they have also realized that if they don't invest in the digital space, they are going to be losing out. DeFi has gone from $646 million to $2.52 billion in a very short time. This is a huge amount of money. So people are becoming more confident to put money into DeFi than put money into other things. Another thing that has happened is that people are now able to lend and borrow money through DeFi, which has not happened before. Before now, it has just been a question of, okay, I'm going to keep this token until it grows. Now, when these tokens become usability, we are now able to actually buy and sell, actually able to make transactions with them. Now we have Bitcoin being able to be used on Ethereum platforms. What I'm talking here. And vis-a-vis. So it becomes very important that they either adjust or they will be behind. And these big players don't want to be left behind. The big players want to be big players always.
Yeah.
So they have no choice but to go into DeFi, to go into crypto, to go into digital economy, whether they like it or not. And that is why you are seeing the shift from traditional finance to DeFi, crypto, although the regulations differ from country to country. But there's going to be a general regulatory body, whether they like it or not, because we are already using traditional finance to regulate ourselves in going into it. Yes, like I said, there is a lot of bad projects out there that people are losing money. But even in traditional finance, you also lose money.
Yeah.
So you need to do your due diligence. You need to look at the HRO. You need to look at technology. You need to look at their business plan. It's called a white paper, but it's actually a business plan. What problem are they trying to solve? Why is it that they are the one that can solve the problem? How the question people don't ask when they are investing is, how do I get my money back? What is your exit strategy? So if you ask all these questions, whether you are an individual investor or you are an institutional investor, you are bound to invest in the right direction. Another thing that has come to play is that I don't see my children or my grandchildren using traditional finance. They are already so used to computers. You have an 8 months old baby or 1 year old baby. He already has an iPad or an iPhone to play with. And once you put on some music, he doesn't cry anymore. They are different from us. They are very different. So the next step in humanity, the next step in human nature is to adapt to all these gadgets, adapt to gaming online, adapt to investing online to survive. And I think the biggest visions are already seeing that.
Yes, absolutely. Thank you so much, Kingsley and Adrian, for your opening remarks. So my next question is, how do these institutions engage with this new DeFi world? What are the different ways should they be engaging with this DeFi world? How easy or how difficult it is for them to reach out? Because it's new space for them as well, right? So Adrian?
First, I would like to touch an idea. Lately, I saw the barrier between, or the line between, stocks and tokens and coins being very narrow. So the coins and the tokens, they become somehow like the shares of a company. And if we are looking also in the market at the tokenization of stocks, initially I saw a platform doing that called morpher.com. I like that platform very, very much. And recently Binance did that with some stocks. And of course, they arised some discussions about potentially regulatory issues here. So the people could buy stock coins, tokenized representations of the assets. Most of the institutional investors and the venture capital people, they were into stocks before, and they entered a little bit into the coin and tokens area. But because this line actually in some cases becomes non-existent, it was normal. It was a normal shift, a natural shift to look in this space. And as Kingsley said, a white paper, it's like a business, it's like a pitch deck. Yes. The difference between white paper is a marketing element anyway, and in many occasions these white papers are not created by the founders. Usually there is an agency doing that. There is a copywriter who is writing the texts, and usually the white paper is done the way the target investors want to see or hear things, so you need to go beyond what's in a white paper, as you need to go beyond what's in a pitch deck.
Right.
So the first step is all the time with institutional investors, but also the regular user should start to do this, to do a personal due diligence. So first you look at the team. Who are these people who are creating this project? What kind of track record do they have? Are they putting fake LinkedIn profiles or no profiles? Are they are hiding themselves? Are they known for rock pools and things like that? And it's what I'm seeing. Most of the people somehow I knew a few years ago that they were doing shady things. All of them are in the blockchain space. All of them are doing something. and it's very important first to analyze who is behind this.
Right.
And one of the reasons is that, for example, if the project may fail, if the team is very good, they will find a way to pivot. They will find a way to change the direction. They will find a way to repair what's wrong and to go further,
Yeah.
Look, for example, in two things which are becoming like the second nature in crypto, in DeFi, staking and farming.
Right.
And I want to go back a little bit with one idea to the previous question. What does it mean for the regular user, the little guy, let's say? So one person having, I don't know, it's just a basic example. Let's say $100, their options are like that. You go to put this $100 in an account with the bank. Usually, it's not it's not a kind of deposit with a fixed term. So probably the interest will be zero. If you want to put more money with some banks, now the interest is negative. And you will get back the fiat money, maybe minus a commission. But of course, the liquidity is 100% every time, especially if there is a car connected. In the DeFi world, you can go with the same $100, and you could buy a token which could be a good one if you make the due diligence. If you analyze the project, you put this money in a token. Let's say you buy a certain quantity, you put them in an investment account in an exchange to have staking rewards, and you can win both from the staking and also from the appreciation of the token, if it will appreciate. Of course, it can depreciate or you can lose the entire funds. It's a big risk. And also, when you put this $100 to the bank, they will lend this $100 to other people with, I don't know, 7% interest or 10% or else. You have the possibility with this $100 in a DeFi space to put them in an account, in a farming account. So other people will be able to borrow this money, and you will also be rewarded. The same, there is a risk here, but anyway, you have more options than before, and these things mean that there are changes of habits in consumer habits, and as an institutional investors, if people are drinking Coca-Cola, I want to have shares in Coca-Cola, because people will never abandon Coca-Cola even during a pandemic, right? And with these new customer habits, I want to be there because people naturally will have more options. Some of them will prefer the very safe fiat gate going to a regular bank. And others will say, come on, 5 years before this was not possible, but today I'm doing only that. Because my heart will not pump if that token will be 50% less tomorrow and will be potentially 200% after 1 week, and so on. It depends of what kind of risk I'm able to absorb, and the institutional investors who are the big players, they are looking at the habits of people, because if millions of people have the same habits, they give birth to a new industry. I want to be there right at the beginning, not when everything will be so freaking expensive. I want to be right at the beginning so I have the maximum rewards, because I can take the risk. It's a managed risk, and by be there at the beginning, I have the first mover advantage. And in this world of the big players, and this caused what I'm calling the Bitcoin institutional bubble. You see, okay, this fund or this institutional investor bought Bitcoin of, I don't know, 100 millions, 1 billion. Other peers, other institutions like that will say, okay, these guys did this move. He's very successful. I will do the same. I will buy this. I will make a press release. And you see, over 1 month, 10 press releases from 10 institutional investors that they bought, I don't know, Bitcoin. They invested in this DeFi project, DeFi direction. So it's like a network effect, This is driven. This makes a lot of demand, and the demand will push the price up, especially if we are talking about non-inflationary tokens. And this is how these big gains are also generated. It's normal. It's a network effect. It's like the people from the first big 50 institutional players, they know each other. They may go to drinks. They go to summits, to masterminds. They discuss. I did this. I did that. So if 2, 3 of them, big ones, very successful ones, are coming into this space, other dozens will follow, and it's normal. And
so there are so many, Adrian, thank you so much for explaining it nicely. So there are so many DeFi platforms, like you started with Uniswap, then you have Sushi, Pancake. How are these different from each other? And
I think
please, Kingsley.
Kingsley, yeah, please.
I think they are one. They are all one and the same thing. They are all offering the same services. It's like dealing with Citibank, Barclays Bank, Mitsubishi Bank, different banks, right? Different financial institutions. They all offer you the same services, but you have to find out which of these services applicable to what you are doing. Like he said before, you doing your due diligence is very important. For example, for a simple man who has $100, you have more opportunity of spreading your money into 2 to 3 different projects. So if one go bad, one is good. But with institutions, they have the ability to enter at a very early stage, because they can put part of the equity for the business down. And because they are a big institution, they are also able to control part of what happens in the company, the management, the staff, the team. What are they doing? Unlike someone from the village who invested $100 will not have a say in what they are doing. But with the big institutions coming in and controlling all those, yes, we are seeing it different. Now when you look at the different platforms, you look at, okay, what is the price of transaction? How easy it is to set up a wallet? How easy it is to use that wallet to put things in other platforms? So
Right.
usability is very important. Then cost effective. It has to be cost effective. for people to be able to use it more. So we are looking at this. And then when you look at the bigger institutions, you look at transportation. Now, if you were to move ordinary $1 million from point A to point B, you need an armored car, right? You need an armored vehicle, you need security, you need police, you need that. But if you are moving 20 million token Bitcoin, for example, you don't need security. You don't need anything, because it is through a very small you put a small gas and the transaction is done without having to move from point A to point B. So these are points that are very, very important in doing this. Then you have more usage of stable coins through DeFi.
Yeah.
And you also have more usage of different projects being able to do it on Ethereum, which makes Ethereum one of the big players. Yeah. So we are looking at different platforms as per what is my goal, what do I want to gain, what is my target. Humans are very greedy. I mean, there are people who went into Bitcoin when it was 30 cents or $50. It's very high now. They are still holding on to it. You can change some of it, or you can invest into other different coins that are coming up right now. So the big institutions are very much aware of that. They don't want to lose out. Getting rich is easy. Staying rich is the difficult part. It's the difficult part for anybody or any institution. And we have seen most institutions going down, falling out, because they refuse to adapt to digitalization. They refuse to adapt to digital finance. And we are already seeing cooperation between banks and them, which is a good thing. So the platform you use depends on what is it good for you. Is it easy for you? Different countries have different regulation. Does my country allow me to use Coinbase? Does my country allow me to use Bitflyer? Does my environment allow me to use Uniswap or use other platforms? So these are some of the factors you have to look at when using different platforms.
Yeah, absolutely, Kingsley. I think there are 2 points coming out of this discussion. One is the staking feature of a platform. The cryptocurrency exchanges offer that, and the DeFi platforms. And Adrian nicely compared it with like $100 example, putting in a bank versus into a staking platform offered by exchange or a project. Similarly, as Kingsley said, Uniswap, Sushi, Pancake, they are all the same if you compare with a bank. So do you think gradually we see more and more with the institutions actually supporting such platforms, more and more banks probably can start exploring this space as well? The traditional banks, I'm asking the traditional banks.
Can I answer this question?
Yes, please. Adrian, go for it.
It was mentioned before, which are the differences between these platforms. If you analyze the code, some of them have copy-paste code from one to the other. And it's an entire discussion here regarding the intellectual property rights over the code. And I'm seeing that with Uniswap v3, they want to address this. So not allowing everybody to copy the code. But there are many hidden aspects which are very important, which are not to be seen by the regular users.
Right.
So, for example, not the code is the most important part here. And these platforms, they have a big problem right now. They are created not with the regular user in mind. They are not so user friendly. So if you are not a tech guy or a little bit a programmer or somebody who is in this space already, it's very difficult to use these platforms. And the usability thing has to be improved over time. to help mass adoption. But this is not the biggest problem here. Any such platform can become a rug pull, meaning that a part of the funds or the majority of funds to be lost like that. And what is very important, because okay, we are talking about decentralized platforms, right?
Yeah.
But these platforms, they don't come from the sky, are created by somebody.
Yeah.
There is a company, there is a team, there is an investor or an investment team. They are putting money, they are putting people hours at the beginning until this becomes a decentralized thing, which is self managed. And of course, they are looking for a return on investment. It's normal. So very important is if the security of the platform is audited, if the smart contracts are audited, and are very famous companies in this space which are doing audits, crazy good audits for the smart contracts part. If you want to launch in this space,
Yeah.
you can use launchpads of really established platforms, which with communities, they are vetting the new projects launched there. They are vetting the team, they are vetting the concept, they are vetting the white paper and everything. So there are so many aspects which the regular users don't know, but they are very important, because let's say you could have an error in your code, so that button to look red instead of being white, this is not so important. But if you have a bug in the smart contract security, allowing the funds to be vanished, or something else bad to happen, this is a real problem. And the institutional players, they look at these things. They have other ways of analyzing the projects which the regular users don't see. But the regular users can learn about it, or at least they can search online for the information if to find out if the code was audited, if the security, if the smart contracts were audited, which were the people who started this platform, and so on. And these are the most important aspects, I would say, because they can make or break this industry, and also they can make or break the trust of users. Because if you put, even with $100, if you put in 2-3 projects and all of them make the funds disappear, you will lose trust in this industry, and you will never come back. Look at the crypto exchanges, for example. What difference is between how were things in 2017 and how are things these days? Last week, a big exchange, Hotbit, had a security breach. They were offline for a few days. They are updating on a daily basis what's happening. They say that there is no problem with funds. They have 2 million users. Last week, a guy from Turkey closed an exchange, and the media say that the media says that he vanished with the money from the users. Of course, I don't know the correct information. It's just what I saw in the media. With a decentralized platform, it's even easy, because you will not know who did that. You will not know who is the person responsibly for that. So even an institutional investor or even a bank could be the investor for one of these decentralized platforms. Why not? Most of the wise banks, they have incubators for startups. They are doing events to attract fintech companies, to attract crypto companies, to develop them, to fund them, and after a while, maybe to integrate them in what they are doing. So we know who's behind Uniswap, but in, I don't know, DocSwap or CatSwap could be a famous bank who is putting a money there, a tech team to develop this project. Why not? I'm joking because everybody's speaking about Dogecoin, but every breed of dogs will have its own coin. There is Shiba now, Husky, Akita, and
Name it.
they have outrageous supplies. Come
Yeah.
on, with Shiba you could buy like 1 billion tokens with $100 or $200, which is crazy. And that's it. Behind these decentralized platforms could be anybody, even a classical bank. You would say that will never put their efforts into crypto, because it's a project, it's a software team. People are paid for their work. It's investment money there could come from VCs, could come from an ICO or an IEO, or from a regular bank who is putting money in that. So I don't see any problem here.
Yeah, I think Adrian, you have touched upon the risk as well with all these platforms and crypto and the DeFi space as well. Besides also supporting these platforms, the ecosystem to grow. I mean, if the banks and the institutions are putting their money, then obviously they are doing their due diligence before they're putting their money. It's not
Exactly. Nothing is done without proper due diligence. I said, in many aspects, regular users, they don't see. They are behind the scenes.
Yeah, correct. Kingsley, you wanted to say something? I just could see that you were about to say something. Add
No,
something.
I was just laughing when he said about the different kind of dog coins. I think that in that case they're just playing on people's sentiments. When it comes to business, sentiments should be left out of it, because they have a short hair American cat and a half banger does not mean I have to invest in everything that comes with that cat. So we have to be very careful, because what they're not doing is they play on your sentiments, on your pets and things like that. But that should not be the case. Yeah, Hotbit had the problem, the talking team had the problem, but most of the time when this happens, yeah, the carpet is removed from under your leg by the person that put the carpet there. We have to be very careful with it. If somebody put the carpet under your leg and put the carpet out, you're going to have a problem. That is why, like I said, you have to do your due diligence. Who are those behind this project?
Yeah.
The institutional investors have more accessibility to find out if there's a bank behind it, there's a post office behind it. This guy that is doing this project, does he have a financial background, or is he just a brilliant trying to do something different? So these are things that institutional investors are able to look at. And once big institutions start putting their money in any project, I believe it becomes safer for the simple man to put their money into it, because they must have done their due diligence before they put their money there. So looking at that, we also have to look at, is this coming from a country that has at least some kind of regulation? If this coming from a country that will take action against the funders or the team if something goes wrong? Or is this happening in a country where if something happens, nobody cares? So there's a lot of things that need to be worked on. But all in all, I believe that DeFi is here to stay, because it's still very young. It's still very young. And if you see the progress they have made in the past 1.5 years or 2 years during this pandemic, they have gone from being millions to billions. And yet there are no fixed regulations yet. But you see a lot of transaction happening between different tokens, between different platforms. And this is becoming a use case for Bitcoin, Ethereum, whatever, because we are not able to actually use the money as to when we are just holding as if it is gold. It's going to grow. Maybe it will go down tomorrow. And the fact that Bitcoin has been stable for some time, not as volatile as before, it is kind of okay up. It also plays a big role in it. The fact that Ethereum, people can build different things on it, also plays a big role. So there's a lot of factors. And the most important factor is the younger generation, the millennials, the Gen Zs are not ready to go into traditional finance anymore.
Right.
You know, so they are embracing everything technology because they do. Every child have a smartphone right now.
Right.
You know, I used to use the phone, you know, the one you dial like that or dial like that, because but now your child will take your phone and tell you, Daddy, you're going to use that. You know, that even a 1-year-old knows how to use the phone. So we are seeing an evolution of human. We are seeing an evolution of a different set of human beings growing and embracing technology, embracing DeFi. So the institution now companies have no choice but to embrace it. But I'll be very happy if they come up with regulations. Countries come up with regulations. Regulations are not just to control the companies. This is what people misunderstand. Regulations are there to protect the citizens of your country when they invest. They are there to protect the common man. They are there to protect the institution. If they invest in the company and the company go bankrupt or the person runs away with the money, they are able to have guidelines to catch that person. You know, bring justice. This is one of the things that regulation does. And most countries ignoring that becomes a problem. Another thing that was said in the beginning by Adrian is management. Are you a good manager? You know, before you become a CEO, you become a leader, you become the president of the country. If you are not able to manage your own self, or manage your own family, or manage your own activities, and have responsibility for it, you will not be able to manage any company or any country. So look at good managers, and he's very good at managing himself. Before I give you my money, I have to know that you manage yourself properly. You are not somebody that go around spending your money anyhow. If you spend your money anyhow, you're going to spend your money anyhow anyway. So you have to look into those things very well. And I think the next phase of life is DeFi, is cryptocurrency, is blockchain, and it's now NFTs are coming up too. Don't forget that.
Yes. I think thank you so much, Kingsley and Adrian, for actually my last question was, what's the future of these platforms? I think everybody agree that it's here to stay and evolve as well. And with the regulations, I think that brings in more trust with the institutional money, getting poured into these platforms as well. That brings a lot of trust with people like, so the retail users and the retail investors can also trust these platforms to invest their money. So great. I mean, we had a great session on a Friday. I don't know if I hear myself talking. So yeah, I had a great.
I can hear you talking.
Sorry, Kingsley.
We can hear you. We can hear you talking.
I just said I could hear repeating myself what I just say. Thank you so much, Octa, for clarifying that. So I had a great session on this today on institutional players into the DeFi space, talking about the differences and the similarities between a DeFi platform, including the features of staking versus putting your money in a bank from Adrian and Kingsley. So it's very interesting times, very, very interesting times. And because of the digital acceleration that happened because of the lockdowns and the pandemic, millennials have obviously picked up. As Kingsley said, you have the access to these platforms from your smartphone, right? Just sitting at the home, you got access to these kind of platforms and you start investing and trading, right? So yeah, hopefully this industry grows with a lot of trust, with the support from institutions and the banks and the big players from the traditional finance space. So thank you so much, Kingsley and Adrian, for your time and contribution to the panel today on VCTV. So you're the core members of the VCTV family. I'll be back next week. We're going to cover. We are coming up with some new topics, new ways of sort of new engagement model on VCTV as well. So please, all the viewers of VCTV, stay tuned. More stuff to come on VCTV over the coming days. Kingsley and Adrian, have a great and safe weekend, because I know in Japan the cases are picked up. Stay safe and have a great weekend. And I'm going to see you back next week. Until then, take care.